Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to a special edition of the Zach's Friday Finish Line. I'm Ryan McQueeney, an associate stock strategist here at Zach's, along with one of our editors, Maddy Johnson.
Hello. Today we're going to be speaking with Christian Magoon, the CEO of Amplify ETFs, which is the issuer of the Amplify Online Retail ETF, iBuy, and Amplify Transformational Data ETF, Block.
Amplify recently launched another ETF to capitalize on the growing demand for batteries. It is called the Amplify Advanced Battery Metals and Materials ETF, and it trades under the ticker BATT.
We were able to talk to Christian about the new battery-focused fund, as well as the broad tech applications the booming battery segment presents to investors. Check it out. Thanks for joining us, Christian. And we wanted to start things off today with a few questions geared towards the investor who may be unfamiliar with the battery industry, or those that are really just starting to invest in this space. So for those that have any familiarity of the battery industry, it could be through lithium-ion batteries and the surge in demand for this commodity thanks to the rise in electric vehicle technology. But there's many more raw materials that play important roles throughout the industry. What other battery metals could curious investors have on their radar?
Yeah, it's a good question, Maddie, because many people are just familiar with lithium-ion batteries, and thus they think of lithium as really being the only metal or material that's in high demand due to kind of this advanced battery technology that we're seeing in smart devices and electric vehicles, et cetera. And there's really, in our view, 5 key metals that have demand driven by kind of the future of the battery industry. The first one definitely is lithium. It has some of the lightest kind of properties of all metals, and it provides the largest specific energy per weight. So very popular metal and something that's involved in basically all lithium-ion batteries. Really bringing up the next kind of battery metal is cobalt. And cobalt is a hard, lustrous, silver gray metal to extract it as a byproduct when mining nickel and copper. It's primarily used as a cathode material in lithium-ion batteries. It's very expensive, however, and there's a lot of issues associated with mining cobalt. Much of it comes from the Democratic Republic of Congo, so there's a fair amount of ESG concerns there, and we've even seen some headlines of late with some of the miners in that space. Nickel would be the third one. It's a silvery white lustrous metal with a slight gold tinge. It's found primarily in large nickel-ion meteorites on Earth, but it's also oftentimes found in combination with iron. Most nickel is used for steel today, but increasingly going forward, it's going to be used more and more for battery technology. The other two are manganese and graphite, and these are very unique substances. Manganese is fairly abundant, used primarily today in steel, but is increasingly used as a cathode material in batteries. And then graphite, it's used as an anode, and it's very heat resistant, which is a big deal when it comes to lithium-ion batteries. Certainly the experiences that Samsung had recently, several years back, as well as some of the Tesla batteries, show that being heat resistant is very important for this technology because it heats up quite a bit, the lithium-ion batteries, and it's one of the areas they're really focusing on in terms of trying to improve battery technology is being more heat resistant. So those are really the 5 key metals as we see them when it comes to this battery metals arena. And these are metals that are increasingly becoming in more and more demand just because of the revolution that we're seeing, really the electrification of fossil fuel in the form of lithium-ion batteries.
So going back to lithium, as Maddy pointed out, electric vehicles have really brought this type of battery to the forefront. Obviously, there's a ton of other cool, fast-growing applications, from smartphones when they're not exploding in your pockets, as you hinted at there, to other portable electronic devices, and then even into a wide range of medical devices. But in your view, what are some other cool technological uses for these metals that some of us may have not heard of or even thought of yet?
Yeah, so Ryan, currently looking back over the last 5 years, all the demand from lithium ion has primarily been from smart devices. And we're now kind of switching over to the primary demand driver being electric vehicles. Here's a quick stat. If you look at a Tesla is powered by the equivalent of 4,500 smartphone batteries. So as electric vehicles become more than a 1% market share, which is what they are today, they rise to maybe 10% market share, which we expect could be an accurate assessment in the next 5 years. We're going to just see this battery metal demand surge. Besides smart devices, besides electric vehicles, the rise of robotics and automation is another key driver. As more and more robots enter the factory, enter the hospital, enter other places of employment, many of these robots are untethered and they need batteries to function. We're also seeing a lot of clean energy technologies emerge. For example, in California, building a new home now, you're going to have solar panels on it. And if you do that, you can't use that solar power energy on a cloudy day or in the evening without a battery to store it. So clean energy storage, whether that's wind or solar, really kind of goes hand in hand with increased battery usage. So those are just a few of the trends that are pushing forward the increased demand on battery metals and lithium-ion batteries that go beyond really electric vehicles or portable electronic devices.
Kind of jumping off of this, what do you think is the biggest growth driver pushing the battery industry forward? Is it robotics and automation, clean energy, or is it kind of the stable or like the widely used electric vehicle and smart devices?
Yeah, so all the forecasts that we've researched from a variety of different energy-related policy organizations, even battery makers and miners, really seem to indicate that electric vehicles are going to be the leading driver of demand going forward. And it's simply because of the amount of raw battery material that they need. In addition, as you know, electric vehicle technology keeps improving. They're trying to have longer ranges, quicker recharging time, longer battery life. All of these are advancements that they're working on when it comes to battery chemistries and are causing more battery metals consumption. So we really believe the kind of underlying driver is going to be primarily electric vehicle demand, second, smart devices, and then third, really energy grid storage as we increasingly move worldwide to trying to be more of a clean energy community.
So rolling off of that, we want to look even kind of further into the future. What do you think the battery industry is going to look like in 25 years, 50 years, or even 100 years? Do you think it's going to morph into something completely different than its current state in 2018? And then if so, I guess, how far away are we from that major pivot?
Yeah, I think, within as much as maybe 20 to 25 years, we could see a completely different source of battery power evolve, something that's more physics-oriented than is traditional metals-oriented. It took quite a while here, over 150 years to really move from fossil fuels to, which is energy technology, if you will, that really isn't very sustainable. When you use fossil fuels, you consume them. And unfortunately, when you consume them, there's a byproduct of pollution. We're now, starting to get to the place where we can successfully use these battery metals to power devices, vehicles, and have some of the similar outcomes, the range, the power, the rechargeability, but at the same time, impact the environment considerably less and really reduce a lot of the pollution surrounding these technologies. The neat thing about battery metals is they're recyclable. So you can recycle, the lithium, for example, that's in your iPhone. And Apple is doing that when they recycle old phones. And being able to reuse these minerals, these metals, these materials, I think is huge. So I think it'll be another 20 years, maybe 25 years before we advance to a new type of fuel to power batteries. And, there could be some developments with some of the computing power that is currently being forecast, like quantum computing, that would help us maybe harness some physics to actually have something that is less actual hard metals and materials and more tapping kind of the power of the atom. So for now, I think over the next 10 years, we're going to see a big migration of many of the main, fossil fuel consumption plays. We'll see them migrate into battery technology. So buses, semi-trailers, tractors, automobiles, even some of the way that we power our homes or places of work. I think a lot of that will transform. And then, hopefully there'll be a next generation, a quarter of a century now, later that comes through that allows us to tap into even a cleaner form of energy, because let's not forget, battery metals are generally mined, and that tends to be fairly messy, time-consuming, and many of these battery metals come from areas that are kind of scattered around the world. They're not necessarily found in many of the developed nations. They're in a lot of emerging nations, and that carries with it a lot of geopolitical risks as well.
So switching gears a little bit, let's focus on maybe the money opportunities in the battery industry could offer investors. What companies or stocks should investors look towards to cash in?
I think it's a great question, because we really believe that supply and demand are lining up in a way that there will be opportunities for investors to take advantage of. We really see increased demand and really constrained supply. So because of the growth in battery demand, we think it'll outstrip current production. Most research publications think that battery supply is going to need to grow 6 to 8 times of where it's at currently. Unfortunately, the supply of battery metals is strained already because of the increase that's occurred in the demand. But also, many of the materials are in areas that take a while or are very costly to mine in. Many of these areas aren't as developed and have a lot of geopolitical issues. So how do you take advantage of it? The way we believe is optimal is to actually go out and own the stocks, the businesses of companies that either hold the reserves or the rights to the reserves of these metals, are exploring for these metals, mining these metals, or in some cases recycling these metals, because eventually recycling will be a fairly significant, maybe double-digit source of these metals supply as devices get recycled, whether that's batteries from cars or batteries from phones. So we think, looking at these miners, these explorers around the world, not just the U.S. In fact, many aren't based in the U.S. The majority are based outside the U.S. in areas like China, South America, Australia, and Canada. Owning these equities, we think, will give investors kind of the best potential appreciation in a way to capitalize on what we expect will be a favorable supply and demand situation for these companies. One way we don't think is a very effective way of investing in this space is to own the battery makers, the electric car manufacturers, essentially groups that are creating batteries and need to have access to supply. So you look at companies like Tesla and Panasonic, for example, which are companies we don't own. We think that they could actually see negative business impact because they may not be able to secure the supply of cobalt or lithium or some of these other metals and materials that they need to produce their batteries. And indeed, if they are, the price of those metals could rise, and they may not be able to pass on all that price through their supply chain into the end user. So we think avoiding those end users of batteries is very important. Instead, find the companies that are really, discovering, refining, exploring, mining, own the rights to these battery metals is going to be the ideal way to play this trend.
It's an interesting perspective, and we're interested in hearing even more about the specifics of the Amplify BATT ETF. So I was checking out the structure of the fund as of June 30th, 2018, and I saw that lithium was making up about 30% of the fund, making it the most represented metal. And then cobalt was coming in second at about 26%. Although it wasn't huge disparities either way, it seemed like a pretty even split. Can you describe the selection criteria a bit more and why we might be seeing this specific structure right now?
Yeah, so the weighting of the portfolio is essentially 30, 30, 20, 20. It has 4 sleeves. So the 2 sleeves that make up 30% of the portfolio are lithium and cobalt, really 2 of the kind of high demand metals that are currently being used heavily in the creation of batteries. The other 2 sleeves, 20% would be nickel And then the remaining 20% is a combination of manganese, graphite, and recyclers. So the thought is to give diverse exposure kind of across the different battery metals, as well as companies that are recycling these battery metals. And that exposure is dynamic over time. Right now, it's been set to this 30, 30, 20, 20. And within those underlying sleeves, the companies in those areas are essentially equally weighted. So the kind of differences in weighting out from the 30, 30, 20, 20 are really a result of market movements and different types of companies performing differently, thus increasing or decreasing the size of the sleeve. So, this is a actively managed ETF. So there's a portfolio management team and a research team behind this that is seeking to be dynamic in terms of the exposure to the various metals and the companies that are essentially mining or exploring or recycling these metals. And, we did this specifically because we wanted to be able to be dynamic over time. We know that the supply and the demand, the chemistry of batteries is constantly changing, and wanted to be able to adapt to that. Oftentimes it's hard to create an index or a set of rules to anticipate the dynamic nature of a market like this. We don't know what the battery chemistry is going to look like 3 years from now, and it could be quite different than today. It could incorporate more manganese, for example, than other elements currently. So we want to be flexible and really have a fund that adapts to kind of the opportunities in this battery metal space. So currently the portfolio, based off that last time period, has 41 holdings. And, the majority of the exposure, just over 90%, are companies that are based outside the U.S. So this is a very globally diverse portfolio, simply because these metals are primarily located outside the U.S. Now, there is some U.S. companies that have rights to some of these metals in mines and operate them outside the U.S. But for the most part, this is kind of a ex-U.S. story in terms of where the metals are located and the majority of ownership takes place. So, what this does is it really gives you a diverse portfolio of these unique battery metals companies that are, basically concentrated in lithium mining, for example, or manganese or cobalt or exploration, whatever the underlying business activity. So in the ETF, you get diversification by metal, diversification by country, diversification by business type, all inside this BATT ETF.
Very cool. So overall, what are the biggest opportunities for investors in the broad battery sector? Should investors be cautious, or is this industry where risk will pay off?
Well, that's a good question. I think there has been a fair amount of risk kind of evidenced very quickly in the launch of this product. As we're speaking, the product's been out for about a month, and we've seen the NAV go from initial offer price of about $20 to trading in the $17 range. So certainly there's going to be more volatility in these stocks. Why is that? Well, recently what we've seen was really two things. Tariff talk from the U.S., talking to a lot of countries that essentially have a lot of these battery metals and materials, and that's affected kind of the equity markets in these countries. And for the most part, a lot of the international markets have been more volatile than the U.S., and that's been a risk that investors have unfortunately in BAT seen the downside of. In addition, the dollar has been very strong, and this is, essentially an equity play on commodities. And because of the strong dollar, that generally hurts commodity prices. So we've seen that downside risk as well. So, some people would say, hey, this is interesting. It may create a buying opportunity. Other people would say, boy, look at the risk involved in these companies. There's no question there's going to be a fair amount of volatility in these companies because they're commodity-based, because many of them are based outside the U.S. When you look at the capitalization of the companies as well, 2/3 of the portfolio is small to mid-cap companies, so just a third is large cap, so that introduces some more volatility there. However, with everything being said, we really think there's an opportunity here, a very strong growth opportunity that over time will show itself. We think some of these recent challenges with these stocks have been more macro issues and not necessarily industry-specific issues. So we think, for investors who have a long-term time horizon and are looking to participate in what we think is a global growth trend, the rise of batteries, that this portfolio should give them some participation in that trend. And ultimately, we trust that the risks will be worth the reward.
All right, Christian. Well, it was really interesting to hear about what is definitely an exciting investment opportunity. And thank you for coming on. And we look forward to speaking with you again as this industry really starts to take off.
Thanks, Ryan. Thanks, Maddie. Appreciate you having me.